I appreciate it. And again, my name is Mark Rowe with Avalara here, and we're going to be talking about tax changes and really what are some of the changes that are happening going into this new year of 2022. So really appreciate this opportunity to present to you. With that, let's go ahead and get started. So what are some of the things we're going to be talking about today? So first and foremost, we're going to be talking about how is e-commerce changing, in terms of new tax obligations because of that increase in e-commerce? What are some of the implications of companies now moving more to a remote workforce? Things relating to marketplace facilitator laws. Are you guys now starting to sell through marketplaces? How supply chain or international is changing. The increased digitization of tax compliance globally, and then we'll also talk further about how automation can remove some of this burden. Well, with that, let's go ahead and kick things off here. So a lot has changed since the pandemic came down, right, in 2020, and a lot of that has spurned on, or I should say, accelerated growth as it relates to e-commerce. It's also made a growth in the brick and mortar sales as well. So a lot of people in 2020 bought everything on e-commerce, and that changed their spending habits. But then with things changing where people can go back into stores, that has also created a surge in sales growth internally in the brick and mortar stores. We've also seen, over the last couple of years, several distribution companies that never traditionally sold direct to consumer are now starting to sell to their customers versus going through their regular distribution channels. So what does that mean as it relates to tax? So what are some of those obligations as those e-commerce changes, or you're selling direct to consumers or your customers? Well, starting in 2019, there was a ruling by the Supreme Court, the Wayfair case, which established that states can now have something called an economic nexus. And essentially that's imposed on remote sellers. So there's 45 states that have economic nexus, and there are different triggers based on how much you sell into a different state that can require you to register into those states. So let's talk about some of those. So there are 45 different states that tax, and essentially what happened is South Dakota created a law which was $100,000 sold into that state, or X amount unique transactions, in this case 200, would require you to now start to register to file and collect sales and use tax. And then as that is expanded over the last 3.5 years, just about every state that has sales tax now has some kind of economic nexus rule. And as you can see, it can vary. Some have a combination of number of transactions, and then the thresholds vary. Some are as low as 100,000 and go all the way up to $500,000. And some states are even getting rid of the transaction limit now. So it makes it easier for you to trigger nexus. In this case, Maine just changed their law where if you sell only 100,000 into that state, then they can now require you to collect tax in the state and require you to register. One thing that Avalara has available is we do have free tax assessment solutions to help you determine, hey, have I crossed the threshold in any state? Built into also our solutions, we have ways that can help monitor your total sales throughout the country so that you can be notified and be proactive and say, hey, am I approaching a threshold within any state that I haven't already registered in? The other thing that obligations change as well is as your nexus changes and needing to collect tax, other obligations come up as well. So not only do I need to collect the tax, I'm now needing to file and remit more returns. If I have a traditional distribution business, I also need to monitor and collect more exemption certificates. And then conversely, depending on the type of business you're in, you could also, rather than sales tax, you may have to remit use tax for the jobs that you do when you trigger in those states as well. So again, why is this important? Well, I think going back prior to the Wayfair ruling, which was in 2018, and some people are still getting up to speed on it, you know, most people just understood, hey, it was physical presence. Well, that still is the law of the land. It's just now that there's more requirements. So as you add these requirements, it makes it harder to, hey, you know, traditionally a lot of companies were only in 1 or 2 states, and that's not too difficult to keep your hands on. But as it expands and could potentially expand through things like e-commerce or just economic nexus, you know, selling into other states, your tax obligations are going to grow. So again, the main thing is not only do I have to worry not just about physical presence, but economic nexus, but what are the obligations that happen once I cross those thresholds? Product and service taxability, those things change. Where do I need to register? When do I need to register? So there's a lot of things to keep a handle on. This question comes up every once in a while, but can I cancel a sales tax registration? So traditionally, prior to Wayfair, it was if I moved out of a state, meaning maybe a remote employee moved out or that project was over, I could go through a deregistration process. And there are things called trailing nexus where that state may say, hey, I need to hold on to you a little bit longer in case you do end up selling any more over the next X period that they tell you to. So that could be weeks, months, years. Similar thing happened with economic nexus. So once you register, you're registered, and the states are going to make it hard for you to deregister. So, you know, I'm not a tax attorney or a CPA, but it's very typical that once you're registered, you're going to be filing and collecting. So coming up with a strategy to stay compliant in that state is something to be aware of. And I think, and again, I'm doing this on my dining table right now. A lot more workers are now remote. A lot of companies are also, you know, allowing more people to work remotely, hiring remote employees, and having a less or decentralizing their company, if you will. Traditionally, any kind of employee, inventory, or office established physical nexus, and therefore you need to collect and file, you know, for sales and use tax. Some states during the last couple of years did have options where they didn't require you because of, you know, hey, we understand it's COVID, but others have gotten, and those have actually expired now. So be on the lookout, like if you have remote employees in states where you weren't traditionally registered, you may want to look into, hey, do I need to register now for sales and use tax? And, you know, similarly with how, you know, a lot more things are virtual, you know, auditors are getting more efficient with their time as well. If they can't physically come into your office, they're now starting, you know, virtual audits. So although you may spend less time with having somebody in your office sitting there looking through your information, there's still that time suck of, if they're not physically here, I now have to find all this information that they want and provide it to them in a specific time frame, or do a, you know, a screen share or things like that. So just be ready for, you know, anything nowadays. So not only somebody sending you a letter, but engaging digitally and being able to provide the information that they're looking for can be a little more cumbersome if you don't have anything digitized. So think of exemption certificates, returns filings, if you have any historic that are still, you know, sent via paper mail. So ways that you can help automate that would be all the better. So let's talk a little bit about marketplace facilitator. So If you're not familiar with a marketplace, and again, you can go back to ancient times, right? This could be the bazaar. Nowadays, it's more of, think of the Amazons, Walmarts, Etsy's, eBays of the world, where there's many different ways that you can sell your goods and wares, whether it be physical or electronic. And a marketplace seller would be that person that is helping you facilitate that sale, whether somebody's, or even think of like a, like if you like going antiquing, right? A lot of those are antique malls where, the marketplace seller is the person that brings their wares, but when you go to check out, it's the actual marketplace that's collecting the money upon that seller's behalf. And what's changed is now states are getting wise to this. So if you are currently or are thinking about selling through one of these marketplaces, let's take the example of, say, Amazon, that could create nexus for you in many different ways. There are, think of, hey, do I send my inventory to Amazon and have them fulfill it? So fulfillment by Amazon, that can be a physical nexus trigger, because you don't know where, in which warehouses your inventory could be in, so therefore that could be triggering physical nexus. Economic nexus, how much is being sold through those marketplaces. So those can be a concern to be understood of, hey, I need to now monitor how much I'm selling both directly or as well as marketplaces. But what are the obligations for that specific marketplace? So that marketplace now needs to collect that tax upon your behalf and remit it for you. And then conversely, you need to report whatever you've sold on the marketplace on your regular returns as well. So having a way to pull that data from that marketplace and report it will make your life a lot easier as well. So keep that in mind if you're either thinking or already selling through a marketplace. So again, now we're talking about supply chain and labor shortages. So again, there's a lot of things that are impacting. I mean, I'm here on the West Coast and I see a lot of container ships just sitting out in the bay waiting to be unloaded. And a lot of that has trickled down, right? There's fewer truckers, fewer longshoremen, and there's shortages to able to get the goods and services off the docks and into people's hands or into stores. Well, there are quite a few different impacts there. So again, new products, product and service taxability, those are things to keep an eye on. Hey, as they come to market, are states considering, hey, is this taxable or not within the state? Are they trying to increase their tax base? Do you now have to find new suppliers because their traditional route is not working? Do I need to now collect new exemption or resale certificates? Do the ones I have, are they up to date if it is a traditional line? If things have been disrupted and rather than me warehousing my own, I'm using a drop shipper now. What are the tax obligations as it relates to that? So those are just a few things to really consider of, hey, if I've had to switch up based on my supply chain, what are the tax implications in that? So how about international tax compliance? So countries now outside the US are trying to get more tax in order to increase their coffers. In the example of the UK, they've now said any online seller that has goods less than 135 pounds or $180 is now required to collect VAT tax and remit it. And similarly with marketplaces, any marketplaces that are selling would now need to start collecting that in the summer of last year. So the bottom line is more, not only states, but now countries are wanting and needing you to collect and remit tax not only after the fact, but in the shopping cart itself. So no longer can you ship something and then depend on the shipper to collect the tax. Say it was shipped via UPS or the post office. If you didn't collect the tax on the front end, they would ship it, but then they wouldn't give the person the good unless they collected the duties and taxes at delivery. So they're getting rid of that option so that you now need to calculate that either in your ERP or through your shopping cart or via your e-commerce solution. So be aware of those things, and again, there are solutions that to help make it easier. They have something called the Import One-Stop Shop, or IOS, and it allows you to, okay, I've collected this tax, how do I remit it to all these countries that I'm shipping to now? And it makes it much easier for you to do that because they've lowered that threshold, if you will. So now they have solutions that you can create one return that will get all those taxes collected remitted to the countries that they need to go to. Other things that are getting a lot more difficult are they want real-time reporting. So in the case of EU countries, as well as like in the example, Hungary and South Korea, essentially rather than you bill it and then you pay it later, they want their money up front. And so while you're invoicing, that is calculated and then you need to pay it at the time of invoice versus later on, like in the case of the United States, you may remit monthly, quarterly, annually. They just want that not only invoice, but reporting, in real time. And so as you can imagine, if you were to expand into any of these countries and needing to do business there, you would need solutions to automate that as well. So, okay, all these changes that have happened, what are some remedies to help me in my company in terms of, can I automate this? It looks very difficult, or things are changing and I need some assistance. What does automation look like? Well, ultimately the goals around automation are, as I mentioned earlier, I mean, it wasn't too hard if you were in a few states, right? Maybe most of your sales were exempt. So you're managing exemption certificates and a portion of your sales were taxable. So the main thing there is when you automate, there's a lot of things that go into the fact of, hey, now if I've expanded, what are all the things that have issues there? So accuracy, right? You want to make sure it's calculated correctly. I don't have the budget to hire people that know how to do this or have expertise, because frankly, it's hard to do it manually anyway. But a way where I can be efficient, and if my nexus grows and I can expand. Make sure that everything is done correctly. The last thing you want to do is have somebody get back to you saying, hey, my tax is wrong. So knowing that the tax calculations are accurate and be able to answer questions on that if needed. Risk mitigating, right? Hey, am I filing my returns on time? Am I filing them correctly? Are the rates correct? And then just overall, I mean, it's a pass-through activity, right? States, jurisdictions, countries are saying you need to collect this as a courtesy for doing business in my jurisdiction. So you have to do the job for them. And so you're not really gonna, there's no growth in hiring more people to do tax and use tax and compliance. So being able to automate that and allow yourself to grow and rather than needing to get more bodies in the tax department, what are ways that we can make you more efficient there? So what does that look like? So again, there's so many different pieces that we can help when you look at the Avalara puzzle that we can offer you, whether it be calculation. So again, integrating the systems you need today. We have over 1,000 different integrations where we can calculate the proper tax real time. Also take into account, content, right? Product, service, taxability, making sure that that's accurate. Now that we've collected the tax properly and calculated that, we can then remit, and do all the filings upon your behalf, making sure they're on time, getting any early filing discounts, document management as it relates to all sorts of things, but mainly resale and exemption certificates. Licensing, we have ways where if there's any licensing, whether it be contractors, vehicles, things like that that need to be licensed, we can help you manage those. Also providing you insights as it relates to, hey, do you need some tax research available at your fingertips? We have you covered there as well. So again, it's not an all or nothing proposition, so you can pick and choose exactly what you're looking for us to help you with. And again, we partner with some of the best, just like implementation specialists. So if you have any questions there, you can definitely reach out to them. With that, I'm going to conclude our presentation today. If you do have any questions, feel free to drop those into the chat. If not, go ahead and reach out to one of your contacts at implementation specialists, and they'd be happy to pass along that information, and we can talk with you after. Thank you very much for your time today. Does